All right. Thank you, everybody, for joining us today. And welcome to the Innovate Pasadena Ask an Expert session. This is actually a special Ask an Expert because this week is Connect Week. And if you're joining us as part of Connect Week, welcome. If you don't know what Connect Week is, I invite you to head on over to connectweek.com to check out the rest of our innovation events taking place through October 17th. And again, welcome. Thank you for joining us. I'm Beth Kuchar. I'm chairperson of Innovate Pasadena. And today we're joined by Wyatt Lonergan from SeedInvest. And over at SeedInvest, Wyatt works with early and growth stage companies seeking investment. And today he'll be answering your questions about equity crowdfunding and how entrepreneurs can raise capital online. So thank you so much for joining us, Wyatt.
Thank you for having me. Happy to be here.
Awesome. Well, fundraising is always a really hot topic for our community, and I'm sure we're going to have lots of questions for you, but I'd love for you to share a little bit more about yourself, SeedInvest, whatever you want to share with the audience before we get started. And we do have some questions that folks asked ahead of time, so we'll be hitting those first.
Awesome. Yeah. Hi, everyone. I'm Wyatt. As Beth said, I'm on the venture team at SeedInvest. What that means is that I work with all of the entrepreneurs that are looking to raise capital on our platform. And prior to SeedInvest, I was actually an entrepreneur myself. I started a bike brand. Prior to that, I worked for a toy company in the CPG space. So I joined SeedInvest because as a founder, I know how difficult it can be to fundraise and kind of navigate raising money for your company, setting valuations, how much should I raise? So at SeedInvest, we built a platform to just connect entrepreneurs and investors using the internet. A lot of what we do is based on the Jobs Act, which was passed in 2012, which opened up access for all investors, not just high net worth individuals. So prior to the Jobs Act, only people who are worth $1 million or more could invest in private companies like startups. Now everybody can invest. And it also allowed entrepreneurs to use the internet to broadly market their fundraise. So not just having behind closed doors conversations or one-off emails or phone calls with investors, you can now use the internet as a platform. So we launched SeedInvest in 2015. Since then, we've raised close to $400 million for a little over 250 startups. We have over 600,000 investors on our platform who invest. A really cool stat is that about 80% of those are non-accredited. So just everyday people who want to diversify their investments and invest in startups. And really excited to be here today to tell you guys a little bit more about SeedInvest and hopefully demystify crowdfunding and early stage startup fundraising for you all.
Awesome. Thank you so much. So I do want to remind everybody in our audience, Wyatt's here to answer your questions. So if you have a question for him, type it in the Q&A and we will get to it. But we did have a few brave folks that had some questions beforehand. And one of the first we were asked, crowdfunding 101, what are the pros and cons of equity crowdfunding?
I'm going to start with the pros. As I said, like with a network of 600,000 investors, your reach is just magnified. For most people, they don't operate in the kind of closed loop circles of Silicon Valley. They're looking for investors. This is a platform for you to connect with investors. I think what's really cool is that if you have also a consumer element to your business, let's say you're selling a product and you're also looking to acquire customers, crowdfunding, equity crowdfunding can be a really cool way to marry that, to have your customer become your investor, who also is then going to be a brand evangelist. And there's lots of data on this that once someone, for example, buys a stock of a public company, they're more likely to use the service. They're more likely to tell somebody else about the service. So there's a lot of network effects that come with that. Also, traditionally, when raising money from venture capitalists, who, by the way, we work with, and I'm sure we'll get to that at some point, there sometimes can be strings attached. They might be joining your board. They might have certain provisions that they want as investors, whether it be based on the future outcome of the company or if things start to go south. We don't have that. So you can say in that case, we're kind of founder friendly. So it's a great way for you to maintain control of your business, but still raise money from a large group of people. And this is a really new form of fundraising. So it's actually only been around for about 5 or 6 years. So just to see the growth over the past couple of years, we think it's going to be a part of everyone's fundraise at some point, in the same way that companies go public. So I think we're in the early innings of this, and I think that's really exciting as well. As for the cons, there are certainly cons. These are new laws. They came out in 2015. They were amended March 15th this year. So entrepreneurs still have to go through a process where they have to file with the SEC. In many cases, they have to work with an outside CPA to either get reviewed or audited financials. This is all based on how much money you're fundraising. That kind of, depending on how much you're going to raise, that's going to affect what you need to do in preparation for the fundraise. The good news is that we've largely productized this process because we've been doing it for so many years. So we actually handle a lot of the SEC filings in-house. We have CPA partners who can help the entrepreneur prep their financials as well, but it's a little bit different than a normal fundraise where you're just interacting with an investor and they're not going to make you file something with the SEC or work with a CPA. So I'd say that's probably the biggest con of the entire process.
Right. And you were also asked, how do I know this is the best way to fund my business?
Yeah, I mean, there's no one way to fund a business. And I think that's, we're very fortunate to live in a world where there are syndicates on angel lists. There are angel networks and groups, in many different cities across the United States and globally. There are equity crowdfunding platforms, and there are venture capital firms, big and small. So I think first, you need to kind of take a temperature check of where you are in your business. Are you looking to raise outside capital and bring other investors into your company? Because you will be giving up ownership and you will be giving up control. The next thing is, how much are you looking to fundraise? It might be more beneficial for you at an early stage to maybe sync up with an industry expert or an advisor, an investor who can really add a lot of value to your business, open new doors for you. Or maybe you're just looking for growth capital, and you kind of have a clear vision and path for your business. So you're not really looking for as much strategic input. So I think you have to weigh all those things. And in many cases with the entrepreneurs we work with, SeedInvest might be that platform for that growth capital, or might be that platform to connect with thousands and thousands of investors. But they also might have 1 to 2 strategic individuals in the round that are also investing, that are providing a different set of benefits to the company. So I think it's always great to kind of put down a list and think of, what do I need right now? What is going to help my business get to the next level? And then prioritize that with your investors. Because there's, especially through social networks like Twitter, there are industry experts everywhere. And at this point, pretty much anyone can be an investor. So that's really exciting. And I think that the winners at the end of the day are the entrepreneurs.
And we've got a lot of questions being asked here, but there is one that I think maybe somebody needs like a sort of just an intro. So Bella was asking, what exactly is equity crowdfunding? And I'm thinking probably looking for like, what's the mechanism? How does this work exactly?
Yeah, so crowdfunding on the internet really started with platforms like Kickstarter, which I'm sure we're all familiar with. In Kickstarter, you crowdfund, meaning you take in dollars in exchange for a product or a service. Like I have this cool, innovative product that I want to sell you, but I need your money in order to build it. And then once I build it, I'm going to give you that product. In this case, you're exchanging equity, meaning you're selling a portion of your business. Maybe that's 10% of your business for $1 million. And you're going to take that $1 million and fund it into the business in order to maybe grow your sales team, your marketing, develop new product, hire certain individuals, which will hopefully then take your business from 10 million to maybe 20, 50, 100 million. And in exchange, as I said, the investor is getting equity, and hopefully that equity will grow in value over time. And if the company is acquired or it goes public, that investor will receive a portion of that income. So it's kind of taking the traditional crowdfunding, but marrying it with venture capital investing.
Got it. And we do have a few more questions to get through. So folks, feel free to type your question in the Q&A, and Wyatt will get to it. But I do want to share another one that was asked of you ahead of time. What happens if you don't reach your funding target? Since you mentioned Kickstarter, I think we all are familiar with how that works.
Yeah. So this is a kind of a core part of SeedInvest, but we create minimum funding targets based on a company's cash position, based on whether or not they're profitable or not. So if they're not profitable, what is their monthly burn rate, meaning how much money are they spending each month, as well as how that's going to change on a go-forward basis. So on average, these minimums tend to be 10 to 100 times higher than some other platforms. But the reason we do this is that we want to make sure that investors are investing money in companies that have longevity. So we really want to get a company at least like a year of runway. If they're unable to meet that target, then we return the money to investors and the company isn't charged anything. A really core part of our service as well is that entrepreneurs aren't charged anything upfront. Oh, my internet was a little spotty there. Entrepreneurs aren't charged anything up front, and they're only charged if we're successful in fundraising for them. So we do have certain situations where a business might not meet their funding target, but maybe they have some objective coming up in the future or some investment that's coming in, and maybe we reconnected them at that time and relaunched them on the platform, and they are successful, because sometimes these things just come down to timing. So not the end of the world, and for an entrepreneur, you could always, again, come back to a platform like us, or use the kind of connections you made from some of our investors to work with them at a future point in time.
So Jeff asks, is SeedInvest effectively the investor while the individual investors actually invest in SeedInvest? Bit of a tongue twister there.
Is it? Yeah, it's a great question. And no. These individual investors become shareholders in the company. What we do is that we set up what's known as a trust account. So not to get like too technical in terms, but the trust acts as the custodian for the shareholders. So they actually hold a share certificate, they custody those shares, and it allows us to group those shares basically as like a company that sits as one line item on the cap table. This is really important because we had a company, NowRx, that raised $20 million with us, and they had 9,550 investors in that round. If we put all of those investors on the cap table, they would be a public reporting company, which would be a big burden for them as a startup. So this is a unique structure that allows it to be one investor on the cap table, but those investors are still investors in the company. They're not investors in SeedInvest. We are a FINRA regulated broker dealer, meaning that we act as the financial intermediary between the investor and the entrepreneur, and that just allows us to give the investors that trust and be that intermediary, so that their money is being handled correctly and it's regulated, and then the founder can ensure that the money from the investors safely makes it to them.
So Ron is asking, do the costs of the raise, that is audited financials, SeedInvest fee, come out of the raise? Approximately what % of the raise will these fees come to? Kind of two questions.
Yeah, it's also a great question. Things like audited financials we don't cover, but we have preferred rates. A lot of entrepreneurs only need to get reviewed financials, which we do cover. Same thing with certain filing fees. So oftentimes you have to file what's known as a Form C if you're raising under what's called regulation crowdfunding. So if you're raising up to $5 million, we handle that in-house. For our really large fundraisers, we have a company, the same company I mentioned, NowRx, raised $20 million from them last year. They're now raising $73.5 million on SeedInvest. They would have to cover their own audited financials, and it only costs about $10,000 to $20,000, as well as filing what's known as a Form A with the SEC. The benefit is, though, that these are preferred partners of ours. We do a lot of business with them, and we're able to keep things to a very tight time schedule, faster than industry norms, and we're also able to reduce the cost significantly. So the fees do come out of the raise. The investor does not pay a fee. The entrepreneurs pay us, and it is a success-based fee. So it's based on what we actually fundraise. So again, you don't have to pay anything to us up front, and only if you're doing one of our really large fundraisers would you have to pay any of our outside parties. And those fees are a sliding scale based on how much capital we actually raise in the round. So it starts at 1 million and goes as high as 75 million.
And Jeff just asks, what is the minimum worth for an investor?
The minimum worth could be anything. And I think that's what's really so cool about this, is that literally anybody and everybody can participate. So regulation crowdfunding and regulation A+ were two exemptions introduced by the SEC through the Jobs Act that were passed in 2015 and 2016. And then amended this year. They actually increased the limits, which I think is really exciting, because it just gives more power to the entrepreneur to raise more money online and from anybody. So there is no net worth requirement. If you're raising from accredited investors only, then there is a net worth requirement, which is $1 million. But that's what we think is so powerful about this. Like only, I think, 4% of the United States classifies as an accredited investor by net worth. So you're leaving out the majority of the United States, and we think it's really powerful that we can be a platform to allow that 96% to invest, because there's a lot of money that's locked up there.
We've got another question coming in. What is the minimum ask?
I think that might mean check size or kind of investment. If that's not, feel free to clarify, but you can start investing with as little as $200. The minimum kind of direct investment we have is $1,000, but we also have this really cool program called Auto Invest, where you basically deposit $1,000 and we make $200 investments into select startups that are raising on our platform. And these startups also tend to be the most successful startups on our platform. So it's a really cool way to get just low check size, easy diversification into a group of startups.
And I'm wondering if this person was asking this question as well, is there a minimum that the startup would be looking to raise?
Yeah, usually we engage with companies that are looking to raise $500,000 or more.
Got it. And Rob says, I've noticed a number of hardware, robotics, for example, companies on SeedInvest. Do you have areas that are more your sweet spot than others?
I'd love to say yes, but the truth is no. If you look at, and there's a great page which we can send around afterwards, but seedinvest.com/raise, you'll see like an industry breakdown. And there's everything from enterprise software to healthcare to fintech to consumer goods, electronics, real estate, clean tech, you name it. And there's a really even spread. And I think the reason is when you have 600,000 investors, they all have different interests. They have maybe have different areas of expertise. So we are just inherently generalists because we want to bring opportunities that everyone can appreciate. So this year, for example, we just did our first, there were recent changes in online betting and online sports betting and fantasy sports betting. So we brought our first online fantasy sports betting platform. And that was the first time we were able to do that. Big hit. I think they raised about $1.5 million. So we love meeting new industries and entrepreneurs that are in industries that we haven't worked with before. But generally speaking, there's no kind of clear standout as to what investors like. And taking that a step further, it also could be that the kind of proven way to generate the best returns in platforms like AngelLists, and we've also released information, is really just to participate in as many investments as possible, because startups are inherently risky. And there really is a power law curve there. So not every company is going to be a success. So that's why we also offer some of these diversification investment products, because you can just invest in lots of different areas, hopefully learn about lots of different areas. And that's kind of proven to be the best way to generate returns.
Okay, and that we had another pre-asked question from someone who registered, who asked what stage startup or what specific industry works best for crowdfunding?
Yeah, so we kind of just talked about the industry piece a little bit, but from a stage perspective, I think we work well with any company from the seed stage and really up. Companies at the seed stage generally have demonstrated some sort of product market fit. So what do I mean by product market fit? Meaning that whether it be through revenue or partnerships or customers, you've proven that this product is in demand from people in the market, whether it be businesses or individual consumers. And we really like meeting startups, as early as possible. Because as I said, that company NowRx, we led their $1 million seed round, I think 4 years ago, and now we're raising, $70+ million for them. And I think our investors really appreciate that as well. So you'll see it's a pretty even mix between early and call it growth stage, kind of Series A and beyond. So just like the industry, it's very generalist, and again, that's also really intentional.
Every time you mention crowdfunding to raise 70 million, I'm taken aback, because I had no idea that that high dollar amount was something that a company would actually crowdfund. That's pretty cool.
Well, it's so unique because we're really in like the 6th year of this being possible for entrepreneurs to leverage. And as of March 15th this year, most entrepreneurs could only raise $1 million online. Now it's 5 to 75 million. So yeah, I mean, it's still very early, but the SEC has made these changes, and it's really benefited companies. So yeah, we're really excited about it.
So Jeff is asking you, how is the share cost calculated? That is, if I'm trying to raise money, how much of the company am I giving away?
Yeah, that is something that we work with every single company on. So we have a formal investment committee process. So we ask that companies complete our due diligence form, meaning that they submit information like a pitch deck, cap table, financials, so like a profit and loss statement, a balance sheet, and financial projections. And then we have a dialogue between our team and your team. And we're able to kind of come up and understand, how much are you looking to raise? How much equity should you be giving away at this stage? We've had, I think, something close to like 75,000 companies apply. So we've also been able to internalize a lot of that data to create kind of ranges where we can say like, hey, this might be off market, or yes, that's very appropriate for a seed stage or a Series A. If there's a lot of information about a business, we can use private and public comps, meaning that we can say a publicly traded company trades at this multiple to revenue, or this private company, maybe someone within our portfolio, or another business that we've looked at, has successfully fundraised based on this revenue multiple or this user multiple. So the later stage a company gets, I think those conversations get easier and easier. At the early stage, sometimes it's just based on dilution or kind of traction or future revenue projections. But I would say it's certainly a bit of an art and a science, and I think that's why we like to work with companies to determine what would be a fair price.
So we have a question here from Nada. Not quite a crowdfunding question, but is a bank or something like govloan.gov helpful to get a business loan?
Yeah, it certainly can be. We've had companies, especially after COVID, get things like PPP loans. We actually set up a really cool partnership with Row Bank and some others to make sure that it was easy for companies in our portfolio to get that funding during COVID. There's plenty of other ways, though. We have a bunch of clean tech businesses right now one that's a lithium ion battery recycler, and another one that's live on our platform right now called Helix Power. And both companies were able to get grant funding from the Department of Energy. So there's lots of different ways. If you're considering something like an SBA loan or government funding, I would just recommend that similar to working with a platform like SeedInvest, reach out, learn as much as you can, and review the terms so that you fully understand the type of loan that you're taking out before you do that.
And I feel like this next question is along those same lines. Can I work with VCs or angel investors and crowd funds?
Absolutely. Within our portfolio, they've received follow-on capital from everyone from Tiger Global to General Catalysts, Sequoia, you name it. We've been able to co-invest with a lot of these people. Google Ventures, Spark Founders Fund, a company that raised capital from or co-invested in a company that raised in our platform earlier. It's co-invested by Andreessen Horowitz. So I think right now with everything that's going on with angel syndicates and raising money online, this is just becoming more and more common for venture capitalists. We've certainly people have asked us, well, is this going to affect my ability to raise from VCs down the line? And again, no, we have not seen that from our portfolio. And we also recently just had the first equity crowdfunded unicorn, a company called Heliogen, that is going public at a $2 billion valuation. So everything from the filing process, getting investors into the right vehicles so that the company can list on an exchange, to it's also backed by Bill Gates. None of this had an impact. If anything, I think, again, it creates more of those network effects, and people are really passionate about the business. And I think it's just going to have a better impact for them when they actually list on an exchange. So no, we are definitely not mutually exclusive. And in many cases, we are working with venture capitalists or angel networks in the round or after the round.
And that perfectly leads into Rob's question here. How does SeedInvest interact with angel or smaller VCs?
Yeah. So if you kind of break down our platform into two core groups, it's founders or companies and investors. So we have a team of people. We have two teams, one that focuses a little bit more on institutions, VCs, and angel groups, to work with them to invest in the companies that are raising on our platform, as well as to find interesting companies. So I find myself interacting with VCs and angels, on a day-to-day basis in order to meet the best entrepreneurs so that we can introduce them to our network. And then with even the smaller investors, we have a team of people that works with them in order to educate them about the offering, explain to them how to invest in companies, really educate them about our services end to end. So we see this as kind of just one giant ecosystem, and we're a part of it, and hopefully we're accelerating it. So yeah, they're really crucial people to funding startups, and they're very good friends of ours as well. So it's a very good relationship.
Cool. And now you're just another tool in the toolbox for startups to find those funding sources and kind of continue on.
Yeah, absolutely. As I said, I don't think you can think about fundraising as kind of one path or another. In fact, many companies might start off raising a friends and family round, take capital from an angel network, maybe meet a VC who adds a lot of value, and maybe along the way work with a platform like SeedInvest. And especially for us, we've moved up the capital stack, and are doing much larger rounds. And we also possess the licenses to take companies public. So that's really what we want to do next. Be there from the beginning and all the way, until a company lists. So there's so many different options, and I think it's never been more exciting for an entrepreneur to raise capital.
And I should mention to our audience that Wyatt has agreed he can stay over a little bit. So if you have questions, make sure to type those in the Q&A. You still have a few more questions. So again, always a really popular topic. Lots of people looking to fundraise. So Nada is asking you, what is the best source to get first-time small businesses such as coffee shops or daycare? And what is the most important thing we should consider? What's reasonable interest?
Yeah, again, there's no one right way to fund a company. I think in terms of drumming up interest, it's always good to have a plan, to have a business, to have a vision and a deck, and a plan that really accompanies that paints a very clear picture for an investor, so that they don't have a ton of questions, that they're excited, even if they're doing their diligence, and they will have a lot of questions, but that they're very excited and they see your vision, and they see that you're the right person to take their money, invest it in this company, and grow it. So for a lot of early stage companies, there's lots of different ways, whether it be to do a traditional crowdfunding like a Kickstarter or an equity crowdfunding. There's lots of different small business fundings that one can take, whether it be through loans from a bank or other programs. And then there's also like your own network, to kind of build your own network. Whether you're in New York City or the West Coast, there's lots of different angel networks that you can tap into. There's also platforms like AngelList that have syndicates, which you can reach out to, and hopefully they'll back your company and introduce you to more investors. So it really depends. I would definitely kind of look locally. Friends and family is a great place to start. And again, once you kind of prove that business out, then it becomes a lot easier to go to professional investors and pitch them on your business. So sometimes it's always good to start small, and then you can kind of tap into a larger network and look for a much bigger round of funding.
And Pietro is asking, does an angel investor have to go through SeedInvest, or can the angel investor stay an independent entity?
So there's a clarification point there, which is if the investor is non-accredited, meaning that they are not a high net worth individual, the SEC mandates that they invest through a platform like ours. So that type of angel investor, the non-accredited angel investor, would have to invest through SeedInvest. Let's use an example of an angel investor that might already be invested in your company, Pietro. No, they would not have to go through SeedInvest. They can fund directly to the company. So in many cases, let's say it's a $2 million round, maybe SeedInvest is funding 1.5 million of that, and $500,000 is coming from your network or your existing investors and angels. If it's easier and more convenient for those investors to just fund directly to you and sign the paperwork through you, then that's totally fine. In order for us to be able to show that traction in the round to our investors, we just verify that the documents were signed and that the money has been received in a bank account. So we validate that through bank statements. And again, as kind of a financial intermediary, that trust is really important because we want to make sure that we're accurately showing how a fundraise is going to all investors. But not every investor has to invest through our platform.
And you have another question here, a location-specific question. How can I reach out to an angel network in San Jose, California? Very specific.
It is. Now I don't, off the top of my head, know of an angel network in San Jose specifically. I would definitely recommend jumping in the good old Google to see if there's potentially some networks in there. I can tell you for sure that there are a ton in California, and San Jose is not too far from Silicon, or is in Silicon Valley, and not too far from San Francisco. So I think great places to find a lot of these people. Twitter is great. There's lots of groups specific to industries, whether it be crypto angel investors, consumer angel investors, AI, you name it. So just kind of doing your research and finding the right people. And that actually is a really important part of the fundraising journey. A lot of entrepreneurs, are just trying to cast a very wide net to meet people. Sometimes it can benefit them actually to take a slower approach and make sure that you're researching and finding the right investors, specifically if they're professionals. or angels. And it looks like Rob chimed in and said Pasadena Angels might be a good one. There's founders and funders. There's lots of them. So we certainly work with a few. I'm a little bit more on the founder side, but our investment team is definitely equipped to make those introductions to companies we work with.
And yes, definite plug to Pasadena Angels. We've got there's lots of VCs and angel networks that aren't investing just in a specific location. So do check out Pasadena Angels, and also check out Innovate Pasadena's YouTube channel. We have an entire Ask an Expert series, and we've had some other venture capital experts that have been on here, and angel investors that answer some of these questions. So, and like Wyatt said, do your research, definitely check out those videos as well. And it looks like, Wyatt, you're being asked, can I have an individual consultation with Wyatt?
Totally. I'll, if I can write in the chat, I'll give you an email address to reach me at, but this goes to our entire team. So you will certainly see me and somebody else, but can I send it to everyone? Yes, there we go. It's just venture@seedinvest.com. We're a small team of 5, so we will all see it. And if you're looking for any other resources on SeedInvest, I'll send one more here that I think is really helpful. There's an FAQ. You can see a little bit more into our diligence process, timelines, questions around fees, which I know people had, case studies. It's just seedinvest.com/raise, and you can learn a lot more about us as well.
Awesome. I'm curious, are there any other questions that you get asked frequently that our audience hasn't brought up here that maybe you'd want to share with folks out there?
Wow. I mean, this was a very good Q&A. I think we covered a broad topic. One that I will address, because some people do get confused about this. We're actually part of a much larger company called Circle. And people often ask me, like, what's the relationship between SeedInvest and Circle? So SeedInvest was actually acquired in 2019 by a crypto fintech bank called Circle. And the real kind of mission and vision behind Circle is that we want to be a company that uses the internet to democratize access to wealth. So one of our core products is a stable coin called USDC, which has about 33 billion in circulation. People use it to trade crypto assets. They use it for payment purposes. And we see that as the future of payments and collapsing the cost of sending money around the world. And SeedInvest is core to that vision because we're using the internet to allow people to invest. Right now, it's just startups, but I think in the future, we'll see all sorts of new asset classes come online. So if you're interested in kind of reading more about Circle as well, it's www.circle.com. Yeah, no, I think though this was a great Q&A and some really detailed questions. So really appreciate it, everyone.
And thank you so much for going over on some of these questions. It's recognized that you're in a different time zone right now. So thank you for sharing your afternoon with us. Any parting info for everybody out there?
Yeah, I think, feel free to reach out at venture@seedinvest.com. I'd be happy to chat. If you're looking to learn more about us, seedinvest.com/raise. You can also just browse the different companies that are raising on the platform. I think that can be a really helpful way to see if you might be a fit. And yeah, I look forward to hopefully chatting with some more of you offline, and I really appreciate all the questions. This was great. And thank you to Innovate Pasadena for having me.
Yeah, it's been great. We'll have to have you back again, answer some more of those detailed questions.
Love it. Yeah.
Thanks, Wyatt. And thank you to everybody who joined us today. Be sure to check out the rest of the Connect Week events. Connect Week is still going on through October 17th. Lots more info on investing and startups and entrepreneurship, technology, design, you name it, everything innovation related. And thank you to our audience and to Wyatt for joining us today.
Thank you, everyone.